Gold prices drop yet again as UK hikes rates despite slowing inflation. Gold prices fell together with commodities, stock markets and most major governments' bond prices Thursday, hitting new 3-month lows for US dollar and euro investors for the third trading day on the run after the Bank of England hiked UK interest rates to the highest since the eve of the global banking crash of 2008. With gold prices falling through $1,920 and €1,750 per troy ounce, the UK gold price in pounds per ounce dropped within £1.50 of £1,500, a record high when first reached during the summer 2020 COVID crisis, but almost 10% below last month's fresh all-time peak. Facing the worst consumer price inflation both in for decades and across today's rich world economies, the bank raised the UK's cost of borrowing for the 13th meeting in a row and made a steep half-point hike for the fourth time in this now 5-point rate-raising campaign, despite repeating in its accompanying statement that the pace of price increases is either flatlining, slowing or set to fall significantly in the second half of 2023. The London stock market fell, down 1.2% on the FTSE All-Share, as did shorter-term UK government debt prices. But longer-term gilts rose, edging both 5-year and 10-year borrowing costs below today's new overnight interest rate of 5.0% per annum at the UK Central Bank, an inverted yield curve often taken to signal an economic recession ahead. Central banks will bring to an end their tightening cycles in H2 to 23, says a note from French investment bank Natixis, because in contrast to the UK's latest consumer price data, inflation in the USA and Eurozone is already slowing at long last. The energy crisis is now behind us, and the decline in headline and core inflation seems well and truly underway for US and Euro consumers and businesses. So while the European Central Bank is set to raise its rates in July and possibly in September, and the Fed could jack up its rates by a further 25 basis points or possibly 50 BP, they should be able to call it a day in Q3, reckons the outlook from Natixis. The bullion market still believes the US Central Bank is very close to finishing their rate hikes, agrees analyst Edward Mer, now at brokerage Merex and quoted today by Reuters. And that's why gold hasn't really done all that much, quotes. It's a little bit on the defensive, but it hasn't collapsed. With gold setting new record highs on a monthly, quarterly, and spot market basis in all major currencies this spring, 4 out of 11 chief investment officers from major private banks in Europe, speaking to UK trade magazine CityWire, just called a position in gold clearly a winner among their asset allocation decisions of the last 12 months. Another half-point of US rate rises make a pretty good guess of where the central bank is heading, said Fed Chair Jerome Powell to lawmakers in testimony on monetary policy Wednesday. Last week's decision to skip an 11th rate rise running was a close call for Chicago Fed President Austin Goolsbee, he said yesterday, because inflation in the price of services is proving pervasive. On the forex market, the pound whipped by almost 1 cent against the dollar inside 15 minutes of today's Bank of England announcement, before trading unchanged from before the decision around $1.28, a 14-month high when reached this time last week. With China shut for the Dragon Boat Festival, Asian stock markets meantime fell everywhere except Tokyo, with European bourses then dropping to pull the MSCI World Index down to its lowest in 7 sessions, some 1.5% below last Thursday's new 14-month high. Today's hike underlines how worried UK policymakers are about higher-than-expected inflation, says financial author and journalist Ed Conway, claiming that it surprises markets /economists. But for once, the committee has acted boldly, and this should help return inflation to a downward path, says former Bowie policymaker Andrew Santans. After rising last week near autumn 2022, as 15-year highs above 4.60%, the 10-year gilt yield dropped towards 4.30% per annum immediately after the bank's decision, the lowest in 7 trading sessions. Silver meantime tracked gold prices lower again, setting new 3-month lows in US dollar terms below $22.40 per troy ounce.